Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to get into everything you need to know on AMC stock as well as the broader markets today. If you are ready, let's go ahead and jump straight into it. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So, we're going to start this one off with Michael Burry. Yes, he just covered on his short position. Michael Burry has closed his $1.6 billion short on the S&P 500 and the NASDAQ for an estimated loss of 40%. Yeah, it's been a rough time if you've been short our markets, and I don't think that's going away anytime soon. We'll break down exactly why I think that is, why I think a rally will likely continue. But yeah, when Michael Burry covers, yeah, it's probably not going down anytime soon. Now, first and foremost, let's get into what happened today. If you guys missed the last video, if you are living under a rock, or maybe, hey, you just missed the last video, you had stuff going on, well, let me get you caught up. Retail sales month over month came in at negative 0.1%. The estimate was negative 0.3%. This was better than expected. Now, 2 days ago, we were expecting the number we got. So, was it really better than expectations? You can make the argument there. This is a reason why bond yields are actually going higher today, and we'll look at the 10-year treasury here in just a second. Really, the big story is PPI month over month for the month of October came in at negative 0.5%. The estimate was positive 0.1%. Last month's number was positive 0.4%. So you have seen a total shift here, like 180, 360 flip. This is good news. Why? PPI is producer price index or producer price inflation. CPI, consumer price index, consumer price inflation. Essentially, PPI is like your businesses, right? Take for an example like Nvidia or any other product really, or a GM or a Tesla, doesn't matter. How much are their costs going up? That's what PPI tells you. If their costs are declining half of 1% for any given month, well, that probably means they're not going to be raising prices. So PPI is a good kind of leading indicator to CPI that prices are probably going to continue to fall, if not stabilize. You're probably not going to see inflation a problem anymore. Inflation is pretty much dead at this point. Now, retail sales coming in a little bit better than expectations is causing a little bit of a knee-jerk reaction in 10-year treasury yields. 10-year treasury yields are up about 9 basis points today at 4.531%. I mean, considering 10-year treasury yields were just at 5%, I don't think this is all too alarming and or shocking that you've fallen a lot and now you're bouncing a lot. It's going to be very volatile right here. Now, what's actually interesting, if you look at the probabilities for rate cuts, rate hikes, just different moves from the Fed, you're actually very bullish today. Even though 10-year treasury yields are rising, the expectations for rate hikes are not. So December 13th, it is 100% priced in that the Fed will not be raising rates nor cutting rates. Same thing for January 31st, 2024. March is where the probabilities start to move around. 76% chance of a continued hold and a 24% chance of a rate cut. For May 1st, you have a 56.5% chance of a rate cut. This is the first time that this has been priced in for May. And there's a 15% chance the Fed will cut twice by May. So that'd be like a cut in March and then a cut in May. There's a 28.5% chance that rates will stay where they currently are. For June, you're again further pricing in at least 2 rate cuts. Well, technically it's pricing in 1, but there's a greater chance of seeing 2 rate cuts by June rather than seeing rates where they are today by June. So higher for longer is really not playing out here in the Fed futures market. There's a 47.1% chance of 1 rate cut by June, 29% chance of 2 rate cuts by June and an 18.9% chance of a continued pause. For July, we're pricing in 2 rate cuts for sure at 39.1% chance. There's a 2.8% chance we see 4 rate cuts by July, and 18.4% chance we see 3 rate cuts by July. So this should be good for small and mid-cap stocks. Now, over the past couple of days, as you have seen, people get, I guess, more bullish. Well, they actually haven't gotten more bullish. So current retail leveraged open bull/bear positions on the SPY, 61% bearish, 39% bullish. Sheesh, that is actually insane. The Dow, 70% bearish, 30% bullish. So this is like a contrarian indicator to say, hey, if people are still this bearish, then you probably can see quite the rally from here. That would be my expectation. Now, you've seen so much bearish positioning. This is comparable levels to the 08-09 Great Financial Crisis as far as the amount of capital in money market funds with overweighted positions to bonds. Now, bonds are going to do okay, but you know what's going to do better? Your Russell 2000, your stocks that are a part of your Russell 2000. And apparently, AMC is still one of the top holdings in the Russell 2000. So, I mean, that's got to benefit AMC to some degree, right? Just as the sentiment shifts, as people turn more bullish on small and mid-cap stocks, it's got to benefit AMC. Let me know what you guys think about that down below in the comments section. Nonetheless, what do you guys think is going to happen next for our markets? I think until we get the recession fears or the actual recession itself, stocks can probably be pretty bullish from here, from now until the end of the year. Now, I'm actually not expecting anything too crazy on the index level. Now, you are going through this cup and handle formation. You have broken to the upside. You've basically confirmed this pattern, right? Which tends to break out to new all-time highs or new cycle highs. That would only be a move higher from here of about 4.5% to get to new highs, like ever for the NASDAQ. But your biggest weightings in the NASDAQ are stocks that don't benefit from the Fed lowering rates, right? Your small mid-cap stocks, maybe a stock like a Tesla, they benefit from rates going lower, from the Fed actually cutting rates. Your big tech guys do not. So I think there will be a widening out of this market. And I do think that widening out of this market is going to bullishly affect small mid-cap stocks. Something like an AMC, I would expect to also do well. Now, AMC has their own problems. AMC has its own issues. The biggest gripe or biggest negative thing you can say about AMC is Adam Aron has no clue what he's doing as far as his structure of diluting shareholders. They just come out whenever they want to. Yep, we're going to raise a 40 million share sale. We're going to do another 40 million share sale with no rhyme or reason, not correlated to whether the stock price of AMC has done well or not. They kind of just go ahead and do it. Now, I'll tell you at this point, AMC has now been profitable the last 2 quarters with a net income to the bottom line, meaning they're adding money to their bank account. That is good. That is obviously better than them losing money. If AMC was losing like 100 million a quarter, they would be essentially going bankrupt because you wouldn't be able to dilute shareholders fast enough to not go bankrupt. So you're in a little bit of a different scenario now, and I think the markets will eventually start to get over all of this dilution, but as of right now, you're not seeing it. Now, AMC stock is down 2.42% here on the day. I think until you get good news for AMC, or you do see another day of kind of a broad market rally, you're probably going to see the stock trade sideways in this range in between $7, $8, maybe even $9 per share. Once you do get more capital flowing into the Russell 2000, keep in mind, Apple is larger than the Russell 2000. So to see, the Russell up like we did yesterday around 5%, really, it was a very, very, very small amount of capital on the sidelines of our markets that caused that move. You could be looking at like a 50+% rally for the broader Russell 2000, you can track that using IWM when the capital actually does flow back into the stock. And I do think that's when a lot of short squeezes will start really across the board. You've already seen that to some degree, like in a Tesla. That stock looks like it is currently going through a short squeeze, but I think AMC will have its turn as well. And again, eventually markets will get over this dilution. But in the meantime, I'm expecting a range bound AMC. I'm not expecting a cratering AMC. I'm not expecting a rocketing AMC until we get a reason for one of those things to happen. If you take a look at the MACD, slightly bearish, yellow line broke under the blue line, starting to trend downwards a little bit. The RSI is so bearish, it's bullish at 36. So anything under 50 is under neutral, right? On the oversold side, where you're at right now, 36 is pretty dang bearish, right? So to see a bounce from here would not be all too surprising, and I wouldn't be shocked. Now let's take a look at the Ortex data. Keep in mind, take this with a big grain of salt. I don't think these numbers are correct, but we're going to go through them nonetheless. You have a live short interest of free flow at 10.2%, 162.81 million shares that are currently sold short, days to cover 0.88, 20.17 million shares that are currently sold short, shares out on loan 21.35 million, cost to borrow 1.33%, utilization of 47.54%, and a short score of 60 out of 100. Cost to borrow fees around 2-3% across the board. Cost to borrow average 2.57%, cost to borrow max 2.82%. If you look at the percentage of stocks above their 50-day moving averages, that is sitting at about 62%, which is getting closer to where you were back in July at about 75% of stocks above their 50-day moving average. So it looks like you have started to see a broader, more inclusive market rally, but I think AMC has some catching up to do nonetheless. Now, if you take a look at the Stocko tracker data for this week, you got about 3,000 calls currently in the money, 160,000 calls that are out the money. So there's a lot of dry powder on the sideline as far as those calls that are out of the money. In the money puts at 32,134, out the money puts at 50,362. So lots of option activity basically across the board. You could get quite bullish here for the right circumstance, right? There's a lot of dry powder into the end of this week, and I expect probably the end of this week, maybe tomorrow or Friday, you're going to see one day that is quite bullish because you just really haven't seen that this week. And again, it has to do with the dilution for the most part, but I do think markets are starting to get over that a little bit more as the expectations for lower Fed funds rates have been going higher, right? People think the Fed's going to cut rates sooner. They're going to cut more. That makes the dilution maybe a little bit not as bad because maybe they won't need to dilute shareholders and equity value as much as they otherwise would have because they could go to the bond market, they could refinance, they could do other things along those lines. So there you have it. That's pretty much going to do it. There's actually not too much for tomorrow. We can take a look at the economic calendar here together. You have some Fed speakers. You have initial jobless claims, Philadelphia Fed manufacturing index, Philly Fed business conditions, CapEx index, employment, new orders, prices paid, industrial production month over month, year over year, manufacturing production year over year, month over month, Fed Williams, Fed Waller, Fed Barr, Kansas Fed composite index, a lot of what I would call second tier data. The CPI, PPI, retail sales are obviously more important, but these second tier data points can also move our market. So that's going to do it for this video. Let me know what you guys think about the course ahead for AMC stock and Michael Burry covering on a short position. Does that mean, the situation's probably going to get even more bullish, or does that mean maybe not? Let me know what you guys think about that down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.